Hey everybody, this is David Skarika. This is stock chart of the day, or I guess profit from pessimism, our members edition. So I was going to quickly talk about this. You'll see the free video up today where I talk about this, but this is really interesting. This is the yield curve. So this is the 2-year bond, basically minus the 10-year bonds yield, and you can see obviously usually shorter end bonds because they're safer and shorter in duration tend to yield less than longer end bonds. So normally it will be like whatever 2-3% like the shorter end bond. So like say when rates were like 1 or 2%, the long end was 3 or 4%, that sort of thing. So what we can see here is in the last 35 years, going back to 1989, which is what this basically goes back to, there's been 3 times, or sorry, 4 times, 1990, 2000, and 2006, 2007, and 2019, where the yield curve went negative and then went positive, went back to positive. So it was inverted and then it went positive. Every time that was a recession, right? And if we were to put, actually, this is something I didn't do in the in this chart. Let's put we'll put it below, sorry. Let's put the just the price of the S&P below it. And what we'll see is, again, in this chart, you'll see, well, it's hard to see some of these, especially because this is not on a log scale, right? So again, I can't really overlay, put it back beneath the chart. So you can see the moving average there. It doesn't allow me to do price, stuff. Anyhow, you can see like what we can see is like you can see the downturn here, during these recessions, here, so the market has a bear market, because obviously stock prices go down and the whatnot as well. So this is all with all this euphoria over the Trump trade. I just wanted to show you this. So I'm getting a lot more defensive. Like we'll look at some of our positions. DDD fell. I did not get stopped out, and then you can see it's down back again today. I'm probably going to sell it soon. Unfortunately, I'm actually down on that last trade now. I just don't want to stick around for a lot of these things. I think one issue is that something like DDD and Fubo are running into right now, and we're stopped out of Fubo. But the reason these stocks are doing so poorly is quite frankly because they're still down year to date. So there's the window dressing. Portfolio managers are probably selling them because they don't want them on their portfolio because these are the 1-year chart and you can see Fubo started the year, it's down over 50% this year. Even with that recent rally in DDD, you can still see is down 50% this year. I'm not selling it yet because remember I told you I want to trade the moving averages more. So DDD is right at the 200-day, and you can see the 200-day is 331, so it's just above that, and the 150 move day is 312. So those will kind of be like my stop losses. So with this kind of new trading I'm doing now, with using the moving averages along with wanting to buy these maximum pessimism plays, is I'll have a long-term position and an intermediate / short-term position. That will be the 150, the intermediate short, and the long-term will be the 200. So, like basically if DDD breaks the 331, and I'll have to watch it today. I didn't really want to actively trade on a Friday of this kind of like holiday week. I'll probably sell half the position, and I'm going to make it really simple. It'll be half and half. So like if say I have $10,000 in the stock, 5,000 is my intermediate, 5,000 is my long-term. So I'm not like, saying like 2/3 is my long-term. I'm just going to make it easy, just half and half. You can do whatever you want. One reason I don't talk about, we talk about price percentage gains. I just want this to be an idea service, right? When I used to do that with Addicted to Profits, I just don't like it because then people just want stock picks. They want to chase stocks, all this stuff. I just like to say, hey, these are the stocks I like. Obviously, anyone who's as a lifetime subscriber, as a paying subscriber, can contact me via email. I'll give you my WhatsApp number, my number, as long as you don't abuse that, obviously. And then you can always write me. And that's what I find. Like I have about a dozen subscribers who do that, and they're my happiest subscribers. They're people that are like, you know, like, even if they lose money, they're like, well, at least I can get in contact with you and see what's going on. So, those are stocks. This is MO. Now, MO, like I said, is a long-term hold. It's kind of like it came off this and now is basing here. Let's look at IRS. IRS is something you might want to sell a bit up here. It's had a huge run for us. It's done really well. You do get that nice dividend, but I just want to get more defensive. So then when I get more defensive, I'm going to be looking at like KKR. I kind of like the setup here now as a short entry in KKR. You can see the bounce. So you've got this decline from about 160, 165 to about 143, we've bounced about 10 points. So you've taken back about roughly half the loss, and now it could be rolling over again. So I like the setup in that kind of short. Another short I've been watching is Chipotle. You can see it had a big decline this, here, and then almost went back to the highs. And now this could just be setting up a big, like if we go look at a longer term chart, this is potentially setting up a long term kind of topping pattern right here, And if that can, you can see when it looked like here back in 2022, it didn't break. It held 25, and then it went up to almost 70. So the question is, can we hold this kind of low here? And if that breaks, and again, if we get off the log scale, we can really see the top here. If that breaks, you're probably looking again at those lows here as well. And this is a very expensive stock. Another one would be Wingstop, right? And you can see Wingstop looks like it is breaking down. This was something I was looking at over the summer. It actually has broken down out of its base. Again, I don't like the short weakness like this, but again, look at KKR. The entry for Wingstop should have been here. The issue with Wingstop is the puts aren't overly liquid, so you probably just have to buy it. So another thing I wanted to show you with the short is, Nvidia, but this could be a topping formation in here. It's down 3 points today. And if we look at NVDS, the NVIDIA short, like obviously that's gone down a lot because NVIDIA's gone up a lot, but like you can kind of see this basing. Let's put it on the log scale so we can see it better. You can kind of see this basing pattern kind of, starting here. Same thing. I'm looking at shorting Bitcoin as well because I think that's topping. Again, you can kind of see that basing in here, which means that Bitcoin is basically topping, right? And then, um, and then there's ZD, I think yeah. So there's an Amazon one too. Again, maybe a potential topping pattern or a bottoming in the Amazon down. So the great thing about NVIDIA, Amazon, Apple, Tesla, there's Tesla Q. You can buy all of these. So Tesla too looks like potential. So it looks like to me we're kind of topping here in the market, and a time frame for some of these market tops. If you go look at like 1966, 1973, 1980, 1906, it can be this kind of early in the year, late in the year, like December to kind of January, February time period. So that could definitely be happening here. And if again we had the Santa Claus rally, and you can see the Santa Claus rally. It looks like, again, this topping formation could be being made here on the market. The Santa Claus rally just basically got us back to the highs. And again, we're going to have a very light volume day on Monday and Tuesday, exiting the year. So maybe it starts in the new year, and you can kind of see, again, you look at these moving averages, the 150 to 200, that's held. 200 doesn't even come close. It did touch the 150 back in August, and that has held in all these declines. So that's something to watch as well. So yeah, that's something I really want to look at here. So we'll kind of look at gold. Gold, I think, still is consolidating, might have a little more downside. You can see the consolidation continues. Obviously, the gold shares are acting poor. They're right near the lows here, but they are oversold. So what I'm looking at in gold here is that, like, look, I talked about interest rates. If these rates keep moving higher and, the dollar maybe potentially has a short-term top in here as well, moves higher as well. But I just think that the gold will get taken down. And then what will happen is once the market drops, whatever, maybe 10, 15, 20%, I don't know what's in there, then the flight to safety in gold will start. Like probably Bitcoin at that point will be down 30, 40% from its highs. Bitcoin is already down about 10%. Of course, it went up a lot as well. So that, and these other risk assets will be down a lot more, with the S&P and Dow down, 5, 10%. And I think that's when the money moves into gold. Because I think the positive thing about gold is, again, you look at this rally or this decline here, that since the November rally in stocks, I'll show you the S&P here too, here, gold is kind of now trading contrary to the market. It was trading with the market all the year. But then on that gap up here in this rally, gold is kind of like consolidated, sold off, while the market looks like it's topping. So I think now gold is kind of that flight to safety. And I want to show you something quickly. If we look at 2018, I'm not going to really focus on the gold stock so much today because I talked about our other positions. I talked about shorts. And I think you got to have to be somewhat focused. You can't just talk about every single little thing, right? Or every single thing. But what I wanted to show you is, let's go back and let's go look at 2018, right? Let's go look at 2017, right? We're going to go look at, let's get this 2018 and we'll go December. Okay, so we're going to show you I don't know why that, no, I said 2018. I don't know why that's not showing up then. Oh, this. Okay, here we go. So yeah, that's 2018. Well, look at gold, really interesting. Again, I talked about the market. This is about when the market topped, right? Gold started to take off. It did get whacked a bit during the sell-off in November, but the market was falling, and I'll show you now in the S&P all the way into December, right? See this? And gold was getting a bid. So gold like basically bottomed when the market topped on its consolidation and then rallied while the market went down, and especially started to rally hard when this big drop came in December of 2018. So I don't know, could we see this kind of decline in January? I don't know. We're kind of more like in here right now. We're kind of in this topping formation. So if January happens, like, and look, these things can take a while. Like if we go back to, I want to go back to 2022 just to show you that, because that bear market, you'll see, look at all the rallies. Like there's a drop in decline, and like the S&P was still, the spiders were still 440. They topped around 450, 460. So they weren't that far away from their highs at the end of March. So this can take a while to kind of like, unfold and top and the whatnot, right? So, you can even see in this summer rally here into August, the S&P was like whatever, 410. It was like 10% only down. And then the final low came in October. So, and again, if we go look at gold here, remember the Fed was raising rates, it was kind of like the same thing. Gold like retreated with the market and then like really took off here. And I think part of it is, again, why did it take off here? Well, it looked like we were, even though the Fed did raise a few times, we're basically coming to the end of the rate hikes. Like we'll look at the TLT, right? Notice that the TLT started to rally and gold started to rally as well. So, and look how much like harder the gold rallied, early on in the move. So gold is going to move up quicker before anything else. And I think that unlike 2022, because we were in we were in a tightening cycle. If we go look at again the TLT, you see it was selling off the whole year. I think now that we're kind of in, or let's look at the IRX, which is the short-term interest rates. Yeah, see, they were going up the whole year. I think now we're in this loosening cycle. So that makes it different. That kind of makes it like, remember in 2018, what happened is it was obvious that the end of the tightening cycle was going to happen, and the Fed was actually going to start cutting rates in 2019. So that's another reason gold kind of moved higher while the market moved lower. And I think we're more similar to that 2018 period because we are now like ending the cycle. And one thing that's hurt gold, dude, is this belief that we're only going to get one or two more rate hikes. So as well. So I mean, rate cuts. And then, of course, if that switches and it looks like, oh, the market's bad, the economy is bad, we're going to get more aggressive rate cuts, that's when gold can take off. So I'm gonna stop it at that, and we'll look at some other things next week. So I hope you like this. I'm not gonna really talk about gold stocks so much. I'll be doing and I'll do what I'm gonna try to do between now and New Year's Day is start doing some like yearly previews. So maybe do some videos and then just kind of slowly let them out over that first week of the year and then go from there. And like I said, my new website and all that stuff kind of got delayed because they pushed back the publishing date of my book from mid-January to mid-March. So I'll talk to you then. Okay, goodbye. Bye.